Welcome to Looking at the Markets with David Modell. Sometimes you might hear me use phrases like accumulation phase, distribution phase, and I want you to know what I'm talking about and be familiar with these terms and the overall cycle that's part of. It's called the Wyckoff market cycle, and it has 4 phases or stages, and they go in order, and they cycle, meaning that after it goes through the 4 phases, it starts over at the beginning again, okay? Now, there's no guarantee this is going to happen, all right? It doesn't always work out this way. It's not 100% guaranteed, but oftentimes you'll see this, and when you start to recognize it and you know the names, then you'll be like, oh, okay, so this is the accumulation phase happening. Oh, this is distribution, okay. And then it can help you to be a better trader or investor. And this is oftentimes used for long-term or swing trading, days, weeks, months, even years. But you can also use it for shorter time frames. You can look for these in even within intraday trading as well, possibly. But oftentimes this is used for longer term. All right, and it could be for stocks, Bitcoin, whatever it is. So it starts out with the accumulation phase right here. You can see it's kind of sideways, choppy sideways, going nowhere. It's increased institutional demand, talking about hedge funds, the whales, the big money investors. And the bulls are slowly gaining power, and as a result, they're poised to push the prices higher. But first you got the chop, right? You got the sideways action. All right. Eventually you get a breakout, and then that's confirmation that, oh, okay, this was accumulating. This was accumulation. The price action on the chart is mostly flat but choppy, and you could see higher lows, but mostly sideways, mostly horizontal. Then you get that breakout, and now we're in the markup phase. And this is where the bulls are gaining enough power to push the price through the upper level of the range. Boom, there it is, right through there. This is usually a signal that the price is entering the second phase, and the markup phase, and that a bullish price trend is emerging on the chart. And you can see those lower highs, lower lows kind of thing. Okay, these things usually don't just go up straight up. Okay, it's still going to chop a little bit, but higher highs, higher lows, markup phase kind of thing. And then eventually it starts to chop sideways again, kind of like accumulation, but now it's near the top of the cycle, the distribution phase. The bears are attempting to regain back control. The price action on the chart is flat, kind of like the accumulation phase, and you may see the failure of the price to create the higher highs on the chart. It's trying to make the higher high, just really not doing it. You might even see lower lows, which could be a sign of an imminent sell-off into the markdown phase. And when it breaks down through that choppy distribution range there, when it breaks down, you start seeing those lower highs, lower lows. Then you're in the last phase, the markdown phase. Comes as a downtrend, begins after the distribution phase, indicates that the bears have gained enough power to push the market in the bearish direction. Markdown is confirmed when the price action breaks down through that lower level of that distribution choppy range there. The flat range of the horizontal distribution channel on the chart breaks down through it. That's confirming it, and then you get those lower highs, lower lows oftentimes. Again, no guarantees any of these things will happen. After the markdown phase, then it starts to go sideways choppy again. You get a range, horizontal range. We're back in accumulation, and it could possibly start all over. All right, so look for these on the charts in real life, and again, could work with any time frame, but this is oftentimes with long-term trading, you're going to start to see this, and it kind of gives you an idea of what the hedge funds, the institutional investors are doing, because they are moving the price a lot more than the individual retail traders with those small accounts. I mean, they can move prices sometimes, but oftentimes this is really the billion-dollar investors doing this, not so much the $1,000 investors. All right. So I hope this was helpful to you. If you like this, then please give it a thumbs up on YouTube and subscribe to my YouTube channel if you didn't do that already. And now you know the terminology, and now you can start using it in your trading and investing. Thank you so much for watching and listening. I will talk to you again soon.